Amazon just reported earnings, and if you think they're still an e-commerce company, think again. Let's break down the real numbers, the AI push, and why it matters to sellers and investors. Amazon stock is up 9% today at the time of this recording. Markets are beginning to reflect Amazon's transition, not just as an e-commerce leader, but as an AI infrastructure powerhouse fueling the next phase of retail growth. Amazon pulled in $180.2 billion in sales this quarter. North American retail made up $106.3 billion. International made up $40.9 billion, and AWS, the cloud business, made up $33 billion. Paid units, meaning the items actually sold and shipped, were up 11%, and 62% of all goods were sold by third-party sellers like you and me. That's a record. North America brought in $106.3 billion in sales, up 11%, but profit dropped to $4.8 billion. This is largely due to rising operating costs. Retail is growing, but the margins are tight. That's a theme we'll come back to. International sales hit $40.9 billion, with a 14% increase year over year. But operating income was just $1.2 billion, down 8%. So again, top-line growth, thin margins globally. Now this is where things flip. AWS brought in just $33 billion in revenue, but $11.4 billion of Amazon's total $17.4 billion in operating income. AWS isn't just cloud hosting anymore. It's becoming the infrastructure layer of AI. Developers are building AI tools using AWS GPU clusters, and just recently, Amazon raised GPU pricing across all regions, a sign of strong demand and pricing power. So let's be clear, Amazon is barely an e-commerce company. Again, here's how Q3 operating income breaks down. Retail North America brought in $4.8 billion, international retail brought in $1.2 billion, and AWS brought in $11.4 billion. This is in profit. While the e-commerce side runs on lower margins and higher volume, the profit engine is AWS. AWS profits help fund the entire retail ecosystem we depend on. It's why Amazon can afford to keep experimenting with AI, fulfillment speed, and ads. And it's working, as AI is in turn optimizing and increasing sales in the retail business. CEO Andy Jassy said Rufus, their AI shopping assistant, has already influenced 250 million users. Shoppers using Rufus are 60% more likely to purchase. If you're selling on Amazon, it's time to get familiar with Rufus and tweak your listings accordingly. Let's not forget Amazon advertising. Ad revenue hit $17.7 billion this quarter, up 22%. That's more than YouTube advertising, fueled by seller demand and AI-powered retail media. Amazon is testing agentic AI, tools that can plan and launch ad campaigns in hours. Their generative AI listing tools have already been used by 1.3 million sellers. Let's see if these tools come over to Amazon Merch on Demand. Amazon is also spending heavily on CapEx, building AI chips, expanding GPU clusters, and optimizing its fulfillment network. AWS and just earned $11.4 billion in profit. That cash gets reinvested. Amazon expects about $125 billion in CapEx for 2025. For context, Microsoft is guiding about $80 billion in CapEx this year. Google is looking at about roughly $75 billion. That investment shows up downstream as seller tools. Rufus AI boosts conversion. Fulfillment is faster. Ads and listings are smarter. So when AWS wins, we all win, because those profits flow back into the tools that grow your sales. Here's what I'm doing next as a seller. Rewriting listings with AI-friendly phrasing and keywords. Watching Rufus suggestions and studying it. Keep running low-bid ads to feed organic rank. Learning how to use the AI ad tools. And focusing on what Amazon itself tells us directly to adapt to. Amazon's AI tools aren't just hype, they're already shifting the game. Amazon crushed profits, seller sales hit a record, and AWS is powering the AI boom. It's not just e-commerce anymore, it's a cloud, ads, and third-party sellers are driving the future. If you're an investor, there's still room to run. Amazon hasn't made the same move that the rest of the Magnificent Seven and AI stocks have made, but the setup is there. And if you're a seller, you're building on a platform that's still growing, evolving fast with real tools and upside.